Yeah, I'm losing my edge.
Today, Pete, we are talking about taking advantage of low fees. Yesterday, we talked about how fees can affect your trading strategy, can affect your probability of success and long-term returns. We got into the big Bears and Colts matchup that's coming up this weekend in the NFL, if there is still an NFL, because now we've got the first team knocked out by COVID, which was, I guess, an inevitability. But I hope that everybody is safe. I hope that they take this as a reason to get even safer protocols, because I love football and I want to continue to watch it. But we likened the gambling line on the potential Bears-Colts game for this weekend, and the VIG that is built into that 50-50 play. Bears plus 2.5, Colts minus 2.5, a 50-50 transaction there theoretically that actually has that minus 110 VIG built into both sides, which demands that you as a bettor have a probability of a success rate that is higher than 50-50, because every win that you take in, you're not betting 100 to make 100. And we likened this, Pete, to fee structures. And in futures here, there's, you know this better than anyone I know. There's clearing fees, there's exchange fees, there's commissions passed on from the brokerage, and all these things that can add up to a healthy amount. Thankfully, at the small exchange, and maybe, Pete, you can run down a little bit of this, maybe illuminate this here for everybody, because small exchange products, if I am correct, they have some of the lowest exchange fees, some of the lowest clearing fees, and at most brokerages have some of the lowest commissions of any futures products out there.
Absolutely. So we talk about friction or cost of doing business. It's the bid offer. It is the fees. And as you mentioned, Frank, at 15 cents and 7 cents if you're a subscriber, they are the lowest fees. You will not be able to trade futures, any kind of futures, anywhere globally for less. So incredibly, we are, and we call ourselves the People's Exchange or the Traders Exchange. We realize what is a challenge, and we have done everything through product creation, through sizing, through simplicity, and through the cost of engaging in product. It's so funny. You've come up with a wonderful tagline. We want you to take your ideas to execution quickly. Well, we want you to do that at the most efficient way possible. And these costs are material. And depending on the firm you're trading at, and what's wonderful, certain firms are working with us. Not only do we have a fee holiday in Sticks, that's why. That's what.
What the hell was that? Is there a rattlesnake in your office?
I have no idea what that is. It's some weird. I don't know if it's windy outside or something, but it's happened like 3 times. Either that or my house is falling down.
Yeah, I would probably evacuate, I think.
But some of the so everyone is working to empower you to get those fees as low as possible.
But yeah, Sticks, we've done the
right.
You wanted to get into a little bit of that.
Right. So Sticks, we've waived our fees. A lot of the firms have waived their fees. So this is the opportunity when you can go and trade the Smalls Technology Index at no fees. So that is an incredibly powerful way to be able to trade markets where you can look depending on product. Now, I'll signal what I think is probably one of the most egregious animals, and it's not to pick on any exchange. I told everyone, they know my story. I spent 20 years at CME as a member trading on the floor. But when they launched Bitcoin futures, they were $5 a contract just for the exchange fees. And then everything was piled on top of it. So think about that terms of cost. And there are levels. There's an exchange fee. There's a brokerage fee. The brokerage fee, our brokers have been unbelievably a true partners. Realize a smaller notional should, every piece of that cost of that product should be less. So everybody from the execution down through, if you're using a firm that has a different software vendor, all those fees dramatically reduce. So they've been very efficient, very affordable. And you know what? It is so material. You and I talked briefly about this yesterday. This is stuff that not necessarily you look at it on a daily basis, but when you look at it at the end of the month, it's like, wow, that was a lot to take risk. And that's what we want. We want to take risk. We want to have an opinion. We see the capital efficiency, all the benefits of trading small products that come with it, the simplicity. But at what cost?
Sure.
I want to take the risk. I don't want to have to bear any of the other costs. And
Yeah.
when you figure in those costs, and you've done so here, look at what you're changing a 50-50 bet from.
Yeah, absolutely. And the sticks product for here in September, the commissions and fees for most places are well under $1. We're still trying to keep this environment where we, unfortunately for everybody else, we do have to make money at some point. So we try to keep these exchange fees and everything as low as possible. So everything usually hovers, depending on the brokerage, around $1, which means that, Pete, at the end of the month, at the end of the year, if I've done, I'm an active trader who takes on risk maybe multiple times per day or a couple times per week, I've probably traded a few hundred to over 1,000 contracts on an annual basis. And like you said, on the day-to-day basis, this, I need 0.2% in my favor to break even, or, I need 1.2% or 2.4% in my favor to break even. That doesn't mean so much. But at the end of the year, you bet your butt that these theoretical values come into play huge. It's crazy how, but today we're going to look at a historical back test on a strategy here, that there's thousands and thousands of these types of strategies. But it's crazy how, after a long time frame, Pete, the theoretical probabilities, they do have your actual success rates converge on them. So at the end of the month, end of the year, after your hundreds or thousands of occurrences, it is going to be a matter of, if I paid $5 per futures trade and I had just a couple of percent in edge, that is huge to the amount of money that I'm coming away with, or if I even broke even on that time frame. And so I want to get to a little bit of the strategy piece here today, because, okay, we highlighted small exchange products, very low exchange fees, and depending on the broker, they can have very low commissions, because some of these brokers, like Interactive Brokers and Tastyworks and a few others, and I'm not leaving anyone out to be mean or anything, but those are just the freshest in my mind. They do have the lowest commissions of any of the futures they offer, because these are small futures and they're trying to, do their part too. And so that all factors in. And the smalls, they only demand that slight edge for potential long-term success. And so now you take that, okay, I only need to be 50.2% in my favor to break even when I'm trading SPRE, sticks, SFX, and SM75. So now let's get to a little bit of the strategy piece, because, Pete, whether you like technical analysis, fundamentals, anything on a minute by minute basis, hourly basis, daily, weekly basis, there are thousands of permutations of trades just among these four products.
Absolutely. And you know what, that's what's so empowering, is the ability to, be able to expand your product mix in a comfortable fashion. I think that is always the wait, is what does it take for me to adopt new product? I know I need to be moving forward and I need to look at the opportunity. What does it take in time and effort, and let's not kid ourselves, in cost to do that? And how can I do that in the most efficient manner? This is one of the reasons we engineered our products the way we did. And it is that ability to go and try new things, employ new strategies. And I think you make a great point, irrespective of time frame. And we just walked through an interesting exercise in one of the products towards a very short-term scalping strategy for them. So I think you're absolutely right. The ability to be able to embrace new product, new strategies, and do so at taking away all those barriers to starting to build successful strategy mechanics is critically important.
Yeah, because in this one product here, small stock 75, which has moved a lot today, it's moved a lot this year. If you're talking about a long-term trader, someone who trades on price extremes or fundamental views that might play out over days and weeks, you had a 30% drop, recouped all of those gains, gave back a bunch, and then we've seen the market kind of go nowhere in the last couple of months, but see some really volatile moves amid all of that going nowhere. This morning, this market was up a couple percentage points and has backed off a little bit. So no matter the time frame within one market, there are so many different things to do. And it's just a matter of finding a handful of strategies that have that greater than 50.2% probability of success. And anybody who uses options and uses everything else that is maybe a little bit more advanced strategy, they're doing the same thing, Pete. Like when you look at puts and calls on a market and you're saying, oh, I want to buy or sell this put or call, and it's got a delta of X, all they're saying to themselves is, in the long run, is buying or selling this option going to perform slightly better than the theoretical value, that delta. Right. So like if I sell, a 30 delta put, and it's got a theoretical probability of success of 70%, in the long run, that strategy is going to be profitable for me if it actually has a realized success rate of 71, 72, or even higher. It's the same thing here. It's looking at stock markets or metals markets that we offer, or currency markets that we offer, or treasury markets that we're going to soon be offering here. It's looking at all these different asset classes and developing a handful of strategies. Oh, I have some edge here, and I'm going to employ it every time I see this. And that is going to get me to that greater than 50.2% probability success. It's nice that the bar here is nice and low, just 0.2 of a percentage point, because we can look at stuff like this, which a lot of people who sell puts in stocks, a lot of option traders have looked at for decades, which is the historically successful strategy of the bounce effect in stocks. Right. Here in 2020, you've got an SM75 contract that, going back to this, you see this red line, small stock 75 is down about 5% on the year. But you look at this, Pete, if you are looking at one down day, the probability of SM75 being a profitable strategy from the long side, the probability of SM75 being up the day following a down day, it's close to 60%. That's a lot of edge in your favor when you're looking at the probability of it just being up or down being very close to 50%. So that's almost 10 percentage points on that low bar that we've set, this bounce effect. And this is something that I just tested here in 2020 for the small stock 75. But Pete, correct me if I'm wrong, this is something that people have been looking at since the equity index pits were huge, right? Decades ago.
Absolutely. And you know what? This idea of statistically significant in terms of long-term probabilities is absolutely something that, you know what, whether we talked a little bit earlier about monthly expirations or somebody's interest in trading options expirations, here's another consistent tool that people will put in. Obviously, it doesn't pay you all the time, but anything we can find an edge within strategy is something that we run through and incorporate. And we know that, you know what, if you're looking for something that's going to pay you 85% of the time, that's going to be a tough one to find.
In futures outrights, that's impossible.
Right.
I'm going to go out on a limb. No one has that strategy.
No. And right. And the old joke is, if they did, they wouldn't share it with anybody. It doesn't exist because, I've been fortunate to work with a lot of different firms, and some of the biggest firms in the world work on margins that are thinner than 51.9 and find huge success with them. So this is absolutely the type of pieces that a frictionless, an easy to use product that has very very low cost to it, lets these strategies become, profitable strategies to add to your trader's toolbox.
Yeah, and it's not this scenario of you talk about those large firms. They're never saying to themselves, I need to buy SM75 or the S&P 500 or whatever 2 or 3 times in the year, and that's gonna make my whole year. They're saying, I want this 59.8% strategy, and I'm going to employ it as often as it comes up. Because guess what? The kind of hidden figure that's in this table is the fact that this opportunity presents itself about 48% of the time. Right? Because we're looking at the fact that the market moves lower, the inverse of this first data point here, 48% of the time, which tells me that out of 250 trading days, Pete, there's about 125 occurrences of this market bouncing after a down day. So
Right.
you've got a ton of occurrences. You have to take advantage of. I know it's really hard sometimes. Every time the market sells off, you want to think to yourself, oh, it's doomsday and this thing is crashing. But as long as you have solid mechanics here, Pete, then you're saying to yourself, yesterday was the down day, this little down day here. And you might say to yourself, oh man, well, they're going from 49 all the way back down to 30. And that very well could happen. It happened here, although you did see some bounces in between.
Right.
But you have to have the mechanics tied in there to say, all right, I'm going to buy it on this down day, looking for the bounce back of 50 cents or $1. And if it goes down again the next day, I'm getting out of the position. That's how you take advantage of these low fees, these greater than 50% strategies. And I want to hopefully bolster that toolbox, get more of these strategies in there so we can further take advantage of the low fees that the small products have to offer.